Afternoon, folks. All right, so we are back in the saddle again. Before I get into this, I just want you to know that I'm aware that Wilbur is sharing charter posts from the forum. So I already got him down into a user group of 100 people. And when I find you, you're removed. All right, so we're looking at the dollar index. This is our weekly perspective on the Dixie. And I want to take your attention up to this area right here. Okay, so that closes in the imbalance here on the city. So that right there is relative to the weekly chart. So that would close that in. Okay, everything else in here is balanced. So we don't really need to see that area to be traded to. We have a high, low, higher high, breaker. So it's kind of like overlapping with that. This is a little bit lower than this, but I want to kind of give you this level because it's more specific, more refined inside of this candle's tail. All right, so I gave you on, what was it, Saturday? For the weekend commentary before the market opened up, that it would likely draw up into these two levels here. And we had consequent encroachment, watch that as well. And here's that weekly level. Okay, so there's three upside well, technically four. We saw the first one trade to here, which is the discount low of the imbalance over here. Okay, again, framework is this low, this high, right in here, and then that weekly level. So discount low, target 1, consequent encroachment of the range of this SIBI, that's target 2, and we haven't traded there yet. Then we have the premium high, that's target 3, and then 4, which would complete my upside objective for the near term, which would be that weekly range in that red level there. Okay, so that way it kind of like fleshes out the idea of on the upside, if we continue to keep moving up into Tuesday, we have retail sales tomorrow at 8:30 for the dollar. So we might work our way up into this a little bit deeper, maybe hit that weekly level on the back of that data. Hourly chart. Okay, we had this short-term low in here. I said we likely trade down into that, and maybe as far as getting into this level here. I did not want to see it trade down below that, because that would be like a line in the sand. If it trades below that and comes back up and acts as resistance, then we'd have to consider something like down here. I believe in the first 5 minutes of Saturday's video, you can go back and listen to it. I promise it's there. I felt that I want to see the dollar trade up into our objectives as we're just showing on the daily chart, and watching it potentially trade down into here. But digging down into this, accumulating, and then rallying up and reaching for our draw on liquidity. This down close candle here, I didn't want to add another level because it's too much going on if I have this one and this one. But when I drop down to the 15-minute time frame, this order block right there, the opening on that candle, is what I'm showing on the extra line. Okay, so you'll see it digging into that. And that's this right here, okay? So that way we're following one another. Short-term high here. The market trades down, takes the sell side out, then rallies. That's what we're looking for. That's the tell, okay? In poker, there's a term used when you can read the opposite person across the table and they may be bluffing. They have a tell, something that shows you or indicates that they may not be actually comfortable doing what they're doing, or trying to put on too much of a bravado, which may not be a characteristic that's been shown hours into the game. So that tell is what's being shown here in the marketplace, and that is the market wanting to go higher. Remember, I took your attention up here on Saturday. I said, this is where it's going to draw to. Did it do it? Looks like it did to me. Does your chart look like this? Of course it does. What you're waiting for is to see it trade down, failed to go lower, so it met that criteria, started rallying. We don't panic. We don't chase it. Does it break market structure? Yes. So there's a shift in market structure that's bullish, in sync now with the draw on liquidity that I drew your attention to on Saturday. The market trades down into the bullish order block in here and into this last down close candle with the lowest close. Notice this one here, and then we had this last down close candle, bullish order block, and it's also essentially the mean threshold of the body. So take the tail off, and there you go, which is also this old low. So it's a real nice symmetry there in terms of how IPTA delivered the perfect turning point at the New York session. Optimal trade entry, low to high, drops down. Then it rallies, comes back down into the order block that's here. Rallies again, trades right back down into the same order block, reclaimed order block. So from this low to this high, dropping down in, gives us one more chance to see this order block accumulate more longs for those that are looking for it, and then displacement. Comes back down in, retraces, and expands up and right into our area of buy side liquidity. Beautiful, beautiful delivery. Exactly as you were given on Saturday. Euro-dollar weekly chart. I promise this is the last weekly chart we'll look at in this video. We're not going to look at it for cable. It's not important. So we're looking at euro-dollar, and we had this area in here, and we're almost down into that. Notice that. But if we accelerate through that, we have a level down here that is suspect. So we have sell side below here, and we have a little bit of a concern with these down close candles. Draw the opening out here on your own charts. Draw that out in time. That might be if we see a continuation on the dollar on the upside, which I favor. I think we're going to still see some of that, at least going into the retail numbers at 8:30 tomorrow on Tuesday for dollar. Then we might see some further expansion on the downside for euro dollar. All right, so here's the levels I gave you on Saturday. We met the first objective, and I gave you one down in here on an order block, and the discount level there. That would be another price point for potential downside, which is really, that's down there a ways. I'm not terribly confident that we're going to run right to that, but over time, if we see a continuation and strengthening of the dollar, in other words, if it gets above its weekly imbalance being rebalanced, in other words, that red level I showed you on the dollar chart, if that gets pierced and goes higher than that, that is what makes this likely. Otherwise, it's probably going to be like the midpoint, maybe the 113 big figure, maybe 113.20, something to that effect on the downside. I think that's favorable for the week. So we'll have to measure whether or not if it gets lower than that, if and when it trades the 13.20, 13 big figure. But for now, it's certainly a decent range, which you've known about. I mentioned that this area over here and over here is essentially a balanced price range. And it could, if it gets overzealous, spike up to the big figure. That's always a likelihood, okay? We're in a deep discount. But I mentioned that this area here, we went below it. If it could trade right back up into this small little area here, in concert with this same range over here, that acts as a balanced price range. So what does that tell you? Expect a potential institutional order flow entry drill. Well, wouldn't you know it? Here you go. You have this candle's high, and then today, boom, we bump into it, and just above it, sell off. Beautiful. Isn't she lovely? Yes, just beautiful. So here's what it looks like on the hourly chart. I promise I won't do any more singing. The imbalance in here, if everybody got sell side imbalance, buy side inefficiency. I mentioned that we could see it trade up into this area, dig into it a little bit. I felt that it would be better, and again, go back and listen to the commentary for Euro, that it would be better to see Euro stay heavy and just roll over. We essentially got that. But notice where the bodies are. See how we're back inside this fair value gap? Yes, we have a little bit of errant price action where it wicks through it a little bit here and here and here and here. But look where the volume is being shown. You get these yahoos on YouTube. Well, you can't really see volume with Forex, which if you're going to look for volume in the traditional sense, you're correct. You're not going to see it that way. But we measure volume with the candlestick's body. We are visual traders. We're getting a visual representation of what the core volume is. Okay, so when we're looking at these candlesticks, while they are extremely distorted by time, sometimes, and I promise I'll teach a little bit more about that this week. I got an email about that because I mentioned it again. Distortion by time. Can you get into that a little bit more, ICT? Yes, I will. I'll talk a little bit more about daily routine this week as well. So I don't know which day I'm going to segue into those topics, but those are the two I'll kind of like work on this week for your teachings. But the volume of all this here, where the prices moves back up in, we swept the short-term high. That's in agreement with what I was outlining for dollar, just the opposite though, okay? But look how beautiful that delivery is. That is IFTA, okay? All these folks out there that just can't come to grips with the evidence. I'm proving this stuff all the time. You see it here. I'm not going to obviously go on YouTube and do this much, proving of it, but you hear it before it happens. And then your chart paints the story that I tell you that it's likely to do before it does it. Where's the argument? Where is the counter argument? There is none. If we were in court, this would be a slam dunk for me. I can do this in front of a judge, in front of a jury, in front of anybody, okay? Once you learn this skill set, you will have that confidence as well. You'll have that skill set to serve you all your days. As long as you have your mental faculties and the markets are still there, you will have this skill set. So, did it deliver the signature that I outlined on Saturday? Now, before I get into all this, I'm not beating the chest. That's not what this is. I'm counseling you because I gave you a lot of jawboning, which, yes, my mouth hurt a lot on Sunday. I was sore. The idea of these long teachings, I got a lot of compliments for that, and I appreciate all that. But the longer teachings tend to drown out the main signatures I'm speaking about when we talk about these particular markets. I stated that I'd rather see Eurodollar stay heavy and just roll it over. Did it do it? Yes. It was limited to its upside. Why? Your homework is to study Euro Pound. Euro Pound will be the answer, and I'll cover that in Tuesday's teaching. But the homework assignment is study all of this price action here in relationship to pound dollar and Euro Pound. Euro Pound is the decoder ring, okay, for why I stated that Euro should stay heavy and just roll over. Okay, and I'll teach on that obviously in more detail on Tuesday. All right, so here is the market trading down below the short-term low here. So we have a market structure shift that's bearish, in line with what we're looking for a bias. We trade up one more time back into that imbalance here. Distortion by time. You don't need to worry about this, okay? If you're trading with this return here, your stop is above here. You're not worrying about what formations and how many candles are forming because you're waiting for the unwinding, the release of price breaking lower than this low here. And then it should accelerate. And we break lower. Not before. We have a small little signature in here. Fair value gap. After it takes another level of short-term lows out. So it's breaking lower and coming back, rebalancing. If it is showing its hand again, it's bearish. It's bumping up into this area here again, then it breaks. That's what I'm trying to teach you. I'm trying to show you that impulsive little snappy move that creates displacement where there is an imbalance or fair value gap. That is the hallmark, okay, that I paired up with what I understand about the algorithm and what interbank traders are looking for. What are they trying to get in sync with? Well, you can't technically see that because it's not in a chart. The overlap is this right there. That little tiny little signature that I've been teaching you for years now. It runs into that, and then you expect what? Price to drop. It should not, at this point here, should not go back above these highs. It should not go back above over here. Trust it. What's it going to reach for? A run below this low here. And then all of the levels I showed you on Saturday as well, it dug into that. And it looks really heavy. So it may want to reach down and go below that 113.70 level overnight, maybe into Asia. And, we'll see. Watch the Australian session around 5 o'clock or so in New Zealand. They might want to dig in a little bit deeper in there as well. It looks extremely heavy. All right, pound dollar. Not too much discussion about this. I'm going to go through it real quick. The market trades up into this little bit of an imbalance in here. And again, I'm counseling you to go into your personal study for euro pound. Small little area in here. I mentioned that I'd like to see this stay open. It could dig up into that. We have it here, and I like this short-term low being broken there with this little drop. To me, even though it looks muddy, I like the idea of it potentially selling off from here and attacking the sell side here and maybe accelerate and get into this level here. That is assuming that we have continuation going into Tuesday with higher dollar. All right, so now if what I just stated about euro dollar is true, look what we have right now. We have the market running up into that, creating the highest high inside that old imbalance. The market breaks lower there. So we take out a short-term low there after going into a premium array. And now we've seen this. What's that right there? That's the fair value gap. That's that little hallmark thing that I'm teaching you here. Now, if this were a live environment where you're in the room with me, I'd be going short right here. I'd have a stop just above here, and I'd be targeting first profit objective partial here, second here, third down there. That's how I would manage it, and that would be more or less my weekly trade. That would be like my one shot, one kill for cable, and if I got stopped out, I wouldn't touch it the rest of the week. But, we'll see what happens. All right, takes us over to the NASDAQ 100. So we have a small little gap in here. I mentioned that I was staying with the bullish side on NASDAQ, but we have a weekly open that we don't know what's going to happen. And you have to always weigh out what is likely to be delivered in price after you get the opening on Sunday. That's always a wild card. I wish there was a way for me to overcome that. I have no tool, no resource, no concept, no secret weapon, no silver bullet. You get what I'm saying? I have nothing that gives me the advantage on Sunday's opening of knowing where it's going to open. I don't know that. So I have to submit to that. And truth be told, early on in my younger years, it was very frustrating for me because I felt convinced that I could figure something out about that. And I just lost too much money trying to do it. So I just don't need it. I just wait. It's just much more peace of mind, just letting it open, do what it's going to do, and then weigh out what it is I want to do if there's a setup. So we came off a discount low. We rallied up and we opened here and then traded up into that little imbalance there. So that's a premium array relative to this high and that low. So we are technically in a premium. Whenever there's a fair value gap like this, we want to see it trade through that and ultimately come back down and find some support. It has to give way. If premium arrays are offering resistance, you have to be aware of that. You have to be sensitive to it in your study. And if you see these things forming in price and you're in a trade, either take the trade off, cut the risk in half, tighten the stop loss up. Just, you can't ignore it, because if you ignore it, you might get snapped with a lot more deeper retracement, or altogether a complete reversal. I'm not suggesting that we are reversing here. I'm not suggesting this is a top, but I just want to let you know that this little shaded area in here is what it is and why it's important. Here's that same shaded area with that low. Extend down time. Here's the imbalance. And ideally, what I mentioned is I wanted to see it trade above that old imbalance. If it comes back down and finds some support, that could use a run into this low resistance liquidity run. Notice how we opened. Here's the gap opening on the new week. We'll see it better when we get into a 15-minute time frame, but it's here. And we drop down, close the gap. Almost, it looks like it closes it here, but it doesn't essentially on the 15-minute time frame, but it does completely close it in on the hourly chart. So what time frame do you use? I prefer the 15-minute time frame. 15-minute time frame for your notes, in case you're not paying attention. The 15-minute time frame is my bellwether time frame. Okay, I like that time frame for lots of reasons, because it's a nice low time frame. It's also a time frame that there's a lot of algorithmic principles that are linked to that specific time frame. There's a lot of high frequency models that work on 15-minute time frames, and they spread a lot of their trades across that specific time frame. And while I can't show you that being done, if you just study the 15-minute time frame the way I teach it, it's not hard to agree with what I'm saying, because the evidence will be seen in your own studies. Okay, and we'll look at it when we drop down the 15-minute time frame. But notice we have the gap. It fills it on the hourly chart, but it doesn't quite do it on the 15-minute time frame. And that's not important. But look at the bodies. Again, respecting the top of the gap. So the premium high of the gap, bodies are respecting that. Yes, we have a little bit of tail here, and we have a small little tail on that one, a small little tail dig into there. But notice what we did. We gapped opening, we consolidated, we didn't run aggressively higher, and we really didn't drop down into a level that created a lot of dynamic price movement higher. It's just hanging around. So it's a gap, consolidation, and then it trades up into an area that I mentioned that, if you're not sensitive to premium arrays on the daily chart, 4-hour chart, and hourly chart, and you ignore the fact that they are keeping price at bay. In other words, it's not allowing price to rally aggressively through it, or if it goes up into them and doesn't trade through them and come back down and act as support, order flow is suspect on the buy side. That means it's likely to create what we're seeing here, which is a false break above and a Charles suit, and then snaps back down into this area here. Okay, so we have a small little fair value gap there. But now I like this coming down from this low to this high. We drop down in. I like this as a short-term bullishness. Maybe trade back up into that gap. But the key is now it needs to get back above the gap, the Sunday gap. So if it trades above it and comes back down, acts as support there, either at the premium high or consequent encroachment, or maybe come back down and touch the discount low of the gap, then it might send it higher on that. But it needs to do that to resume bullishness for me. Okay, I'm neutral. That means I'm not selling short. I'm not bearish. I'm bullish, waiting for confirmation. That's what I'm looking for. So if we do wipe out and go lower, this is where you're going to be focusing, okay? First profit would be down here if you can find a setup that would offer a short. But this is where they're going to want to take it. I'm not suggesting it's bearish yet. I'm just suggesting that if it fails to go higher, that's the levels it would reach for. I'm not in agreement with that yet. All right, so 15-minute time frame, you can see the market trades up into that daily fair value gap. And this is the AM session. It's essentially 7 a.m. to noon, lunchtime New York. And we create this run above here. Buy side liquidity is purged. We go right up into that daily fair value gap. And does it trade through it? No. It comes back out of it. And then we immediate rebalance here. And it sells off aggressively. That right there is confirmation that this was a stop run above here. And we're likely to go lower. The fair value gap on the hourly chart, which doesn't look so clear here, but we have a bullish order block with these consecutive down close candles. And it's also a consequent encroachment of this low and this high. That's what this line is. Okay, it's several things there. Shaded area in here, that's New York lunch. That's essentially the noon to 1 o'clock in the afternoon. That's a time where if you're trading, you want to take profits on the AM session and move to the sidelines. Do not trade. Okay? Listen to what I'm saying here. There's going to be people out there that say, oh, I'm going to take a trade no matter what. Do not take a trade between noon and 1 p.m. on indices. Stock indices can get very fickle. Okay? And a lot of traders still respect that floor trader's lunch hour. Okay, and it may not be like that 20 years from now, but right now it still is. So it's a perfect time to time a profit taking, and notice it overlaps with the hourly fair value gap that was shown to you before it drops on the 15-minute time frame, and the order block, it hits it right at the lunch hour. Then what happens? We have a retracement. Okay, and now let's assume for a moment that this was a market that was predisposed to go lower. In other words, it was bearish, which it's not. Okay, I don't see this as a bearish market. But we had this decline. Normally, folks would see this stuff here and say, oh, I watched those leaked ICT videos and it's going right up into here and I'm going to sell short there because it's an optimal trade entry. And it's going to go down to this low here and this low down here. That is not what I see here. It's not what I would see or interpret. I see this as it's retracing during lunch, and then it's going to come back down and pick up more orders at the order block here, and then try to gravitate back to that weekly opening gap. That's my interpretation of what this would do. So this is just, in my mind, a retracement, a deeper retracement or correction, taking it down to a discount relative to this low, to this high. Everybody down thinks it's topped. I'm not trying to pick a top. I'm not. So, and we still have really the month of December. And I think that we'll still be rallying, as we go into December, maybe in the week before Christmas. So one day doesn't change a trend for me. And ultimately, this is still bullish. I mean, we're going down to a discount array, and the market showed a nice snap here. It's accumulating off this order block, so we'll see if it wants to gravitate back up into here. But ultimately, what I'm saying is I think we're going to go above this high. We just have to work out the short-term volatility in the marketplace. And my friends, I think that's going to be it for today. Don't think I have anything else I want to bring up in terms of housekeeping. I believe it's going to be it. So until I talk to you tomorrow, be safe.